I think it's the idea of delayed gratification. Being younger, you kind of just want to see results right away. But I think it takes a while to realize that if you put in some kind of, plan and you can execute that plan, you can really achieve a lot higher goals than you probably set for yourself.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Nathan Rupprecht and Adam Kaduce here on the show. Guys, welcome.
Thank you. Glad to be here.
Thanks, Neil.
I'm excited you're here. Say, for the audience's sake, who are you? Where are you from? What do you do?
I'm Nathan Rupprecht from West Des Moines, commercial real estate broker at R&R Realty Group here in West Des Moines.
Adam Kaduce, oversee the brokerage team at R&R Realty Group, located in West Des Moines, commercial industrial office developed.
Tell me, how did you guys get into this business? Take me back to the beginning.
Then you go ahead. You've got a little shorter story than me.
Yeah. I mean, R&R Realty Group, it's a family-owned business started by my grandfather, so I've always grown up around it. So it was always an idea of something I wanted to do, but when I graduated from Iowa State back in 2019, it's like, how do you decide what you're going to do for the rest of your life? I still don't even know, but
Sure.
It's I had it narrowed down to three things: either doing insurance, banking, or real estate. And somehow 6 years later, I've done all three. So wanted to move out of Des Moines for a little bit. I ended up moving to Minneapolis. Some time up there for about 2 or 3 years. Was in the property and casualty business and insurance, working at Burns and Wilcox is the company name. About 2022, it was time to move back, and ended up at West Bank, in their commercial lending department as a credit analyst. That was a great experience for me. And, kind of felt like, a way you can underwrite, and learn, financials, statements, and, how businesses cash flow and make money. And eventually just wanted to make the jump into sales, and R&R had an availability. And that's kind of how I ended up, with R&R in the brokerage team.
My story is just longer because I've been around a lot longer. But no, I started with R&R actually as an intern. I was studying finance at Drake between my junior and senior year. I had actually told my dad a couple of years before that I was interested in commercial real estate. Wasn't so interested in the residential side, but the commercial side. He connected me with a broker at R&R, and as things do, that went from a coffee meeting to a job shadow, ultimately to an internship. So I spent the summer between junior and senior year there, and really started to fall in love with the business. And R&R had said, well, why don't you stick around? Is this something you're interested in continuing to do? And I said, yes, I really am enjoying this business, but at the same time, I always wanted to go to law school. I didn't necessarily know what I wanted to do after law school, but I knew that was where I wanted to go. And they said, well, why don't you just stick around, keep working for us part-time, keep interning for us. And I'm like, this is about the best deal ever, right? And keep working, keep making a little money and while I go to school. And so I did that through law school, got my real estate license between my second and third year of law school, started doing deals. You become a deal junkie, you love that piece of it.
Right.
It gets a little bit addicting. And it's like, okay, I actually really, really like this. So I wanted to pass the bar, just wanted to get that done. Took that summer off after law school. I passed the bar with my classmates, and then took a couple of weeks sabbatical and started full time in August. And that's been about 15 years ago, and just started where Nathan started, doing deals, doing brokerage, just doing a lot of networking and prospecting. And ultimately, as our team at R&R continued to grow, I got to continue to build my team and the people that worked under me. And ultimately now that's a team of 7 really professional commercial real estate brokers, and out doing a lot of work on behalf of the R&R portfolio, but then doing a variety of real estate around the metro.
What did you learn in law school that you've applied to your day-to-day role?
Yeah. It's kind of the intangible of just the way law school teaches you to think. But when you're going through law school, there's a lot of issue spotting training about, you may read a case that's 75 or an opinion that's 75 pages long, but there's 3 sentences in there. There's really the meat of it. And it really teaches you to figure out what that is. And I think as we're working with real estate clients, whether that's helping them really identify a space that meets their needs or working through a lease negotiation or proposal negotiation, really trying to get down to what that issue is and what those issues are and why, what the motivations are behind those. Those have been really, really helpful. I don't use the rules of evidence or the rules of civil procedure at all in my life, but it teaches you that way of thinking. And I think law school also teaches you maybe a level of creativity that most people wouldn't appreciate either. You have to be creative to either win an argument, or you have to be creative to come up with an agreement that both parties feel like they're happy with and feel like they have equal protection in. And I think that was one thing that I really enjoyed about law school, was just that creativity to try and come up with agreements and documents or an argument that was better or would make everybody successful.
Yeah. It's in the insurance world, a lot of us talk about, you hear about insurance today, insurance going through the roof. Some of that, or most of it, from an agency standpoint, is totally outside of their controls, down to the underwriting, down to the company. And so from an agency standpoint, it seems like an agent is there to help guide somebody through, to put a package together, to come up with a solution that's pretty palatable. Tell me about your experience in that insurance world. What have you taken forward with that maybe it's been helpful in some capacity as it relates to real estate?
When I was in the insurance world, it was kind of pre-pandemic. I feel like, since then, we had just certain kind of catastrophic events that kind of put the insurance, property and casualty world on a spin. The derecho was an example of that. Really just, it was very soft market and it's hardened year after year. And, no different than just with inflation too. So it's just all these are rising costs that you're seeing across all kind of industries, just outside of insurance as well. In real estate, construction prices are high, cost of labor is high. And the cost of capital with insurance rates spiking is high as well.
I know a lot of people who end up in real estate after being in banking, more specifically an analyst role in banking, because they get to they're like right in the guts of putting deals together, understanding underwriting. A lot of times, if it fits a bank's underwriting criteria, it'll fit an investor's underwriting criteria, right? Knowing that a bank is more conservative, generally speaking, than an investor. How's that help?
I think they're similar but different. You view it as a credit. It's completely different to look at it, as a credit role versus, if you're have your developer hat on. I don't do any asset management myself, but they view it as more of, is this a safe, you're looking for the wrong things. Not saying you do that, in kind of having that developer hat on as well, but you're more looking to, maximize returns. So I don't know. I think it just helps. In my shoes, I'm trying to look at leases. I have to, you have to process a lot of numbers and make sure it works. I represent the landlord working for R&R and making sure, it's a good deal for both parties.
What was it like growing up in the real estate family world? Most tremendous amount of your family is in the business, if you will. What was that? What were dinners like? What were conversations like?
Yeah, when you're growing up and, hanging out with, my dad, my uncles, my grandfather, you kind of just view them as who they are. Sure. You don't really talk business that much, but they're just a wealth of knowledge if you ever do want to talk to them about real estate. They are well established. They've been in the business a long time. I'm sure, Adam's learned quite a bit from some of the older Rupprechts and Dan as well. But, it's a great, it's easy for me to go up and talk to them. And I don't know, starting in the family business, it was a little weird at first, seeing, people, seeing them in kind of that high executive role. But then you kind of see, they put in the work and know what they're doing. And, they earn their way to get there.
Yeah. Adam, you've been around a long time in the business. Maybe for those who are not intimately familiar with the R&R portfolio, maybe give us an understanding of what that looks like.
Yeah, appreciate it. So it really is a development company at heart. And so we'd love to come in and buy 50 to 250 acres. And then we're going to do really soup to nuts throughout that process. So we've got the development team that can come in and master plan that site, look at infrastructure, bring in the right engineers, contractors, and ultimately then it's Nathan and I's team that's out working with businesses every day to whether it's an industrial or office or support retail, how to make that a success. And then we're going to manage that for the long term too. So we've got our own in-house management. And R&R just celebrating 40 years. So over 40 years, we've done that process a lot of times. Yeah. We're up to about 10 million square feet of commercial office and industrial space. It's actually a pretty close to a 50-50 split between office and industrial. And then we've got an office here in West Des Moines where our headquarters are, where R&R was founded. And then we've got an office over in Omaha. And we've entered Omaha in the last 10 years. And that's been a really great opportunity for us to go into a new market. We've hired some great people over there and have really done a lot of what we do here in Des Moines. So we've come in and tried to buy large tracts of ground. We've had some really good industrial success. Omaha didn't have the distribution logistics space that Des Moines had. And so that's been an opportunity for us to take our experience here and take it to Omaha and find success. But we really pride ourselves on being top tier provider of those office and industrial spaces and managing it really to a best in class manner. So we really pride ourselves on being able to take care of long-term customers. We have customers, I don't know if any of our customers are 40 years old, but there's some of them that are getting pretty close. And really want to not outgrow a customer either. So as their needs, we've seen a lot of evolution of office space over those years. And so wanting to continue to adapt and be relevant to our customers and continue to provide them services.
Roughly what percentage of the portfolio is here in Iowa versus?
It's about 80-20. I'd say we have about 10 million square feet total on our portfolio. So about 8 million in Des Moines and about 2 million in Omaha. And we kind of made that jump. That was just kind of a, the investors or the people on the investment committee thought it was, a very similar market to Des Moines, thought, a good plug and play. And I think we, way in the move about 7-8 years ago.
The interesting thing about being that size is it creates a tremendous opportunity for people to make moves, an office user inside, staying with the same management company, right?
Yep.
To go, yes, I love the way you take care of a property as their business grows. You guys have evolved over the years to provide additional and ample opportunity for them to grow within your footprint.
Yeah, it really has been something we tell our customers about, and we've backed it up too. We've had, I haven't kept track, but we saw a lot of that pre-COVID. We're starting to see more of it now too. Company grows and maybe the space next door isn't available for them because there's another customer there. So let's look at going through that process of finding what the right space is. And we've even had customers that, were in a neighborhood and their needs have changed. Their employees have moved to different parts of town. Now they want to move their business. And so that's been really fun too. Or just the needs they needed from space when they started the business or when they moved in with us have changed. Maybe they need a little bit more warehouse space, or maybe they want to move and consolidate things, but move into a nicer building or a newer building. And so it's kind of a 365-degree approach to what do you need when you need it, and then let's help you find that. And it does help to have the size that we can do that. And we do it enough times that we've gotten really good at working with customers through that.
Hey, Iowa investors, this is Ava Bautkamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit LegacyImpactInvestors.com to apply.
Let's talk about office. Where all of us, myself and the listeners, we all read the headlines. And so, give us an understanding of what's it like out there. Nobody knows it better than you guys. You're there day in and day out, fighting a good fight.
Yeah, I mean, I can touch on it a little bit. The common trend that we're seeing is flight to quality. So, people typically, they might be right coming out of the pandemic, they're realizing maybe we have a little too much space. It might need a right size. But I think the common theme we're seeing is, work from home remotely, 100%. I don't really think that exists in Des Moines in our market. We're more seeing, at least our customers are typically in, 5 days a week, or they're kind of doing that hybrid, 3 days in, kind of the middle of the week, and then maybe work from home Monday through Friday. But a way to, employers to get their employees excited about the office is having those amenities around them, any kind, like, I don't know. I was going to say, example with our Arcadia building is that we have, Starbucks kiosks in the lobby. We have, like a grab and go kind of, snack bar. You have green trails to walk through. You have kind of like an outdoor, bonfire patio area. So just things like that, that their employees can utilize as a way that to get people excited to go to the office. And I think that's anything else you want to add, Adam?
Yeah, just, most employers are kind of scared of that mandate word. They don't want to mandate and say, we're back. And so they're trying to reinvent their office space to be a place that people want to come to. Nathan hit on, we're just trying to look at what are those amenities. The Arcadia building that Nathan mentioned it's a 275,000 square foot office building. It's just off Jordan Creek Parkway. It was a long time Wells Fargo campus. Wells Fargo told us they were vacating the building. As an organization, we wanted to be really intentional about what does the future of this building look like? And we did some analysis on, is it a multifamily conversion? Finally, just came to the conclusion that this is probably always going to be an office building. It just doesn't lay out well for anything else. And so we said, what are the amenities that we think are going to attract customers for the next generation of office workers? We think people are going to, this is during COVID, we think people are going to come back to the office, but how can we help employers excite their people about coming back. And so that's how we developed a lot of these amenities. The one additional one that's been really important has been childcare. A lot of people got used to having kids home or having kids home more often during COVID, or have a little bit more flexibility. So the building actually brought in a childcare center and operated by a national childcare provider. But employers in the building or employees in the building can ride the elevator down and go down to the daycare, have lunch with their kids, or go check in on them throughout the day. And I think that's been a really benefit for the building in the area. But it just kind of tries to take what do people really like about their work from home setup that we could put into an office building that supports that employer bringing their people back.
You've seen some, read the headlines, Trump's in office. You got a lot of, I continue to read about people, mandates coming back in. Some of the tech companies going, you got to be in 5 days a week. Seems like we are now, there's a greater movement from a mandate standpoint. And I suspect some of the big ones start to roll. We start getting back there probably at a greater pace. Are you seeing that? Is it happening? Is it too soon to say at this point that you're starting to see people, I would say, back in the office more than call it just a year ago?
I think so. It seems like it. We haven't seen, probably short of during 2020, maybe early 2021, a lot of companies go totally remote. Most of our customers just went back to more of a hybrid setup. And if you're in 3 days a week, 4 days a week, 5 days a week, your footprint is probably going to be pretty steady. So I think most of our customers are back in the office. They've probably been back 2 or 3 or 4 days a week for a while. But we're definitely seeing that push up. If they were in 2 days a week, they're probably looking at more like 3, 4. If they were in 3, 4, they're probably looking at like, how do we get that last day out of people? So I do think we're seeing more of it. Just driving around, it used to be Monday, Fridays, buildings were pretty empty. And you're definitely seeing that change now and more of it, especially in the suburbs where you have low commute times. And I will say that the other benefit, I think, too, is employers have gotten very flexible. We want you in the office, but, they understand about doctor's appointments, kids' activities, things like that. So I think we're maybe finding a good middle ground of flexible employers, but them also wanting to get that collaboration, that innovation, and that problem solving from their people together, too.
What's vacancy look like? But do you have buildings that are challenged?
Yeah.
I want to go a little further on the office side. What does that look like? Or is it, it seems like, or are you in a spot where it can make some sense to move people, so we get some really full, super full buildings and then have some less full or vacant buildings to create optionality inside the real estate, whether it be a conversion, whether it be a sale, whether it be whatever that happened to be.
I was just going to say, in the western suburbs, we kind of track, I'd say occupancy or stabilization right now to be around that kind of like 80% range. And the ones that your question was just what the current office space is currently, but it's the ones that are really struggling are probably those larger floor plates, those buildings that are more, set up. It's hard to carve out, kind of those 1,000 square foot under. Some buildings are easier than others to put in a corridor and then, chop that up. It's the ones that I'd say that don't really have amenities, they get their employees excited to go to. And then the ones that, are really hard to carve up and, it's really only meant for, a full floor or full building users, which is just kind of hard to come, or a few fish out in the market.
Yeah. It's been really trying to kind of an all options on the table type approach, depending on what that building is. Because unfortunately, every building's got a little different story and a little different solution. And while some buildings might be great residential plays, some are never going to be residential plays. But we've looked at some different things, like we've had a couple of those large open floor plate buildings like Nathan mentioned, where we look at, do we cut an atrium in the middle of it to try and get more natural light in and make those spaces more attractive. We didn't pursue that project. We ended up having a customer come in to want to lease the building, but it's kind of an all of the above approach. We've also looked at, we've got some buildings that are probably overparked, and the Arcadia building, we put about 4.5 acres back to green space and more of an outdoor amenity. We've also looked at, do we sell off some of that excess parking for outlot development, or bring in a little bit more community retail, support retail, to try and reignite that building and make it more attractive. So it's really been trying to figure out what's the most attractive. It's tearing down buildings gets really tough because then you've got that cost on top of redeveloping it. Right. So that's not, I don't know that we'll see much of that in the suburbs. I think that this, probably not in this market. We might see that in larger markets where your costs are a lot different, and your rents can support more of that. But I think it's probably, to Nathan's point, it's a lot of looking at amenities, a lot of looking at new finishes. And then ultimately, I think we'll see, at least downtown, more of that conversion to residential.
Thinking forward, as the office market strengthens over a period of time, maybe interest rates pull back a little bit, and therefore development is back on the table to now construct new office space. How do you think going through what one's going through now will impact the development and the layout of buildings in the future?
Yeah, I was going to say, I think what's really big and what employees want or employers want is, make sure they have good window lines. Window lines seems to be really impactful. So just making sure, the depth of their spaces are just not super, deep and kind of more shallow. I'd say that's probably the way that they would set it up. And then you'd have more corridors so you can chop it up into kind of smaller spaces.
Yeah, I think that's a perfect answer, especially for a suburban market like we're in. It may be interesting to see if long-term some of those downtown buildings, they build them with maybe more plumbing and sewer lines, thinking that this could be convertible someday. I've seen some of that. We saw a little bit of that with parking ramps in bigger cities, thinking that as autonomous cars happen and more of that, this may be a building or a residence someday. I don't know if that makes a lot of cost sense in our market, but certainly in big markets, I could see it and make more sense.
I would imagine as you're sitting there trying to get a thing to pencil on the front end, you're going, we got to put more infrastructure in
Yeah.
for what might happen in a decade or 2 decades.
And I don't know what you want more of in your office building is water lines running everywhere either, right?
Yeah.
It could present some certain maintenance challenges too. So I think Nathan's got a good read on that for our market of just, you want to be able to accommodate a 25,000 square foot user, but also a 1,000 square foot user. And if you could do that, I think that's going to be the best option for places like us.
I hear, just turn the offices into apartments. That's what everybody's going to do. That's the rave across the country. And we see it take place downtown and in the suburbs. I don't think it has taken place yet.
No.
It's just some of these don't seem like it's going to be aligned. Like it just doesn't make any sense from where it sits on a street. May not make any sense from the building structure.
I think you have a lot of, based on our residential office buildings, I just think there's a lot of, things that make that really, really difficult, really impossible. Right. Location, we have a lot more green space here. You can build these wide open office buildings with big open floor plates. Well, those are the worst thing you want for a residential.
Right.
And I think too, then, you just, people like that walkability where they live. And if you want more of that urban style, you're not going to get any of that in the suburbs either. So, and we typically don't have the high rises. So it's hard to get the scale that you need to get to. So I'd be surprised if we see it. I think maybe the better opportunities are like Valley West Mall or something like that, where you'll see a project get demolished and then come back and do ground up. And I was at a conference the other day talking about the residential conversion. That can be, what they were saying was 2 to 3 times more expensive to convert a building to residential as you can do in ground up. In a market like ours, we still got ground available to do ground up. So, I just think it's going to be really tough. And I just don't think we'll see much of it.
It seems like it works downtown and in urban cores, central business districts across the country, because the ground is so valuable that structure sits on, that there isn't anything left. And so it makes sense to go in and make that conversion.
Yep. I think you're spot on.
Talk to me about industrial. What's happening in the industrial market?
Yeah, industrial markets, I definitely would say, it was kind of before I got in the business. I've been in, brokerage for probably like a year and a half, but everyone kind of talks about this boom in industrial about 2022. And, there was a lot of, supply that came on the market, big box, first generation. It seems that the demand has slowed down, probably just because due to, COVID coming out, everyone kind of had to up their storage and, make sure their, logistics, supply chain was up to date and up to speed. But I think we're seeing good demand in our second generation spaces, kind of plug and play. They'd probably need to change some things around, do some kind of tenant improvements to, fit whatever their operations are. It's slowed down a little bit in kind of that first generation where, they need to put in demising and do a full build out, just to the, high interest rate, if they need to, borrow any funds or, just labor cost and construction cost.
If you're a house flipper, execute the BRRRR strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Are you seeing house absorption taking place right now? It seems like some of that, as you read some of the market reports, it can get a little skewed, meaning, the vacancy may look high, but it could also just because a building just finished and now all of a sudden 300,000 got delivered to market. And of course that'll skew the vacancy upward depending on what's delivered to market. What's absorption look like? Are you seeing the same thing in industrial that you're seeing in office, meaning they're taking less space?
Right now, absorption feels more like a normal year to me.
Hmm.
I think we had that, Nathan is right. We had that ramp up during COVID. And I think we saw a year or two of pretty slow demand. And that happened to be at the same time all that product got delivered. So we did. I mean, maybe if office vacancies were 5%, we would be concerned about the industrial vacancy rates, but they still look pretty good. And I think we're seeing some absorption. We saw some deals at the end of last year. We saw some more lease signings, and we've seen really no new supply come online. So I think it's going to take us a couple of years to get through that maybe 10% vacancy rate that we have. But there's activity out there. And I would say about a normal deal velocity and more of a normal deal size, so that this has always been a 30, 50, 75,000 square foot market. During COVID, seeing those 100,000+ square foot requirements, that was just, I would love it if that was the norm, but I think that was a little peculiar. So we're seeing that deal return to a normal size. I don't think it's gotten smaller. In fact, I think it just feels like probably a healthy deal size, healthy deal volume right now. Nathan's right. Second generation has been popular, and you can come into a building that's been occupied by somebody before that's going to function really well. It's got some office build out existing. It's maybe got some existing infrastructure that last tenant left behind. And they can come into that for maybe $2 cheaper a foot than they can a new build. And so that's been really attractive to folks.
Talking about that same vein as where you work, the new builds, it seems like on a forward basis, things are going to continue to get more expensive.
Mm-hmm.
You know, as we're recording this, a bunch of brand new tariffs are all rolling in place. And when this rolls out, who knows where that lands. But right now, it looks like things are getting more expensive. It doesn't seem like a tremendous amount of new developments in the pipeline to deliver industrial over the course of the next 12 to 24 months. I'm wondering what that looks like in your crystal ball over the next 5 years, because it seems like if rates, if the cost of construction continues to climb, that spread you just mentioned is a couple bucks, maybe more like $5 to $7. Those who own industrial today, those who buy industrial today at today's basis are going to be well rewarded over a period of time.
Yeah. I think we are likely to see construction prices continue to rise. Maybe the saving grace might be the fact that there's not a lot of development activity. So we're starting to see some contractors start to get a little bit more aggressive. The biggest chunk of that is labor, and labor costs have been really, really sticky. And that's usually a tough one to get down much. And again, then if you tack on higher material costs and tariffs and those things, I think maybe you can eat up a little bit. Maybe you can get some cost out of it by trying to get some of those other costs down to offset the tariffs. We've seen pretty consistent increases in prices over the years. I will say the second gen space pretty closely follows. If those rental rates push up to 7 or 8 or 9, second gen market's going to go up too, just because you can. I do think that industrial for a long time was never a sexy asset class, and nobody ever talked about it. Then COVID hits, and you see a lot of funds run that direction. You see a lot of institutional dollars go that way. And I think we've seen that maybe not as much demand for that, but that has remained a really healthy asset class. And I think it's probably getting the appreciation it deserves. And I think it'll continue to be a really stable asset class for people, and probably be one that investors will continue to want to have at least some exposure into, because those users, as long as we keep, short of Amazon being disrupted or the way we buy products as consumers again, I think you're going to see that demand be pretty strong. Probably not the crazy ramp up like during COVID, but it's I think going to be pretty consistent moving forward.
What's something that's uniquely different that would be probably unexpected to the average person if they heard it, between the clients who lease office and those who lease industrial?
I think your industrial folks, it's a lot about function. Industrial buildings, if you're an industrial user, the building has to work for you. The racking heights have to work, the sprinklers have to work, the dock doors, the layouts, the access is probably number one. It just has to work for your business. It doesn't matter necessarily what the building looks like or that it's an architecturally beautiful building. It's got to function. And I think office takes more of the if industrial is function, maybe office is more form. People care about how it looks. They care about what it feels like, what it smells like, all of those things. It's a little bit more of an emotional touch than it is on industrial. And I think it's fun to work on the industrial side. I enjoy it. Nathan and I enjoy the industrial side of the business because it's just got to function right. Yeah. And then you go to the office side and it's like, oh, let me tell you about all the different Starbucks drinks you can get at this
Yeah.
machine and those types of things. It's much more an experiential side of the business, but that's fun. I think it's fun to go back and forth, and the building's got to work, but there's a lot of, office users have a lot more flexibility in what can work. So I think that's a lot of fun.
I was going to say too, office, a lot of it depends on kind of their business and their line of business, but their office space is kind of a reflection of, their brand, I'd say. So, if they have customers in there, they got to make sure that, they have good office space and, want to do business with people that, would reflect that, I guess.
It seems like having to vacillate between the two, it maybe taxes your brain, keeps you on your toes a little bit, I would imagine.
I think it's fun.
Yeah, you kind of get used to it. The deals are kind of set up the same, and it just, you just are, no, they're just two different assets. You're bouncing back and forth. I mean, a lot of it too is just kind of knowing our product. No one kind of knows our inventory better than, people on our brokerage team. So I think that really helps too, is just, knowing what we have available and then knowing, all the different kind of buildings we have in our portfolio.
Is one of those a shorter conversion time frame from, short pitch? Yeah, from a sales standpoint.
During COVID, industrial got really short because there was so little product and so much demand. You basically had to make some really fast decisions. We're probably beyond that now. We've we've got a higher inventory, and I don't know that one's shorter than the other. I would say the large office users, that takes a while because there's a lot involved, and it's more the design, the construction, and probably just takes longer to build out. Whereas if you're just putting a couple thousand square feet of office into a warehouse, that can go a little bit quicker. So I'd say office deal timelines take longer if you're counting construction, but just tour to deal signing, it's probably really similar.
And it kind of just depends on their situation too, because it depends how motivated is your tenant. Do they have some kind of deadline that they're up against, or do they need to more space now, or can they sit on it a little bit and are waiting for the right space?
What are you most excited about this year?
Oh, what are you excited about, Nathan?
For me, I don't know if it's more about the industry. It's more just for myself. I'm kind of, be the new guy, on the team at R&R, started about a year and a half ago. So I feel like I got, boots on the ground down and kind of understand the business and my role. It's just more of just how can I get out there and kind of grow my brand and, establish myself and being a commercial real estate broker in the West Des Moines market. So just trying to, meet as many people as I can, network, and let them know I'm Nathan Rupprecht and with R&R, and this is what I do. Just try to grow my brand.
Sure.
We're recording this the week all these tariffs roll out. If we would have talked Monday, I probably would have said, there's a lot of business certainty. Businesses seem like they've got a good game path and a good runway here to start making some decisions, development, things like that. And then by the end of the week, a lot's changed. I still think, hopefully we're by the time this airs, we'll be in a much more clear air, a much more certain business environment. And I do feel like, getting through the election has given businesses, regardless who wins, it just gives them more clarity and more consistency. And we typically see that year after businesses are making some more long-term planning. So I'm certainly excited for that and looking forward to just letting businesses really kind of expand, grow. And we've seen a little bit of that. And I think we're really on the cusp of some continued growth from employers in our buildings.
Yeah. What do you find that's maybe unique about Des Moines? And maybe, how did you guys end up on third base, if you will, by just being in Des Moines, with your grandfather starting this so many years ago? Nobody could have quite the foresight to go 40 years later. We're going to be the fastest growing city in the Midwest. And there are so many positive things taking place here.
Yeah, I think there's something unique about the culture here and the people's willingness to connect.
Mm-hmm.
Maybe it's that Iowa nice, but I think here in Des Moines, there's a sense within the business community that there's a camaraderie and a collaboration. And I think that was started by maybe 2 or 3 generations before us of them willing to work on projects together. If you think about how the Civic Center came to be, or some of the marquee projects in our community, those business leaders getting together and saying, we're going to take this and we're going to do it. And I think that's come down generationally to now where business leaders and business people are willing to sit down, have a good discussion, have a conversation. There seems like there's a sense of we want to do this for the greater good of our community. Now, we're sitting here having this conversation because of just a conversation by someone else. And I don't think that happens in every other city, or I know it doesn't happen with the frequency that it does in Des Moines. And I just think there's that common collaboration amongst people in Des Moines that you don't see in a lot of cities.
I was going to say, just real estate's completely a relationship business, It's just who you know, and people who work well together want to do deals together.
Yeah.
You guys ready for the final 3 questions?
Fire away.
Let's do it.
If you had one piece of advice for your 20-year-old self, what would it be?
I think it's the idea of delayed gratification. Being younger, you kind of just want to see results right away. But I think it takes a while to realize that, if you put in some kind of, plan and you can execute that plan, you can really achieve, a lot higher goals than you probably set for yourself. So just the idea of delayed gratification.
I think just having a default to yes mindset is probably a thought that I have. When I was thinking back to that era, you're offered maybe a committee assignment or an opportunity to serve with a nonprofit or things like that. And you might think, I'm not qualified for that, or I don't know that I really have the skill set to do that. And giving yourself the benefit of the doubt to default to yes and say yes. And that's probably going to be a great growth opportunity. If you don't think you're qualified to do it, that's probably going to be a spot where you can grow, lean in, make the most of it. And I think that'll serve you well long term.
2 books that changed your life.
Yeah, I read a little bit, but more on the audibles, I'd say. But the first one, it could be a kind of a cliche answer, but it's Atomic Habits. I just think it's a great book to, kind of teach you the importance of, setting, day-to-day habits, knowing what's within your control, what's outside of your control, and, just trying to get 1% better every day. And then the other one, Adam kind of recommended it to me, was Fanatical Prospecting. Coming from West Bank in that kind of credit analyst role, I didn't have any experience in sales. And that really is kind of my Bible now of, just the importance of always trying to feed your funnel, continue out the outreach, and really just gives you a good guideline of how to, reach out or cold call and make emails.
Yeah, I really like the book, Pound the Stone. It's told through a parable, but it's just a really good story. I mean, it's through the analogy of, if you try to break a rock, you don't do it with one hit, you do it consistently over time. But it's told through the story of a grandfather and a son, or grandfather and grandson. And it's just a really good story that teaches some really good life lessons through a story. And then Ego is the Enemy by Ryan Holiday. I'm a big Stoic philosophy Ryan Holiday fan. And I think that's one of his early books in a series. And I reread it probably once every other year. It's just a good reminder. And I do listen to it on Audible too. And the way he reads it, it's just like, it just hits me. Yeah.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. What 3 things must you know every single month to know how your business is running?
Okay, Nathan and I were talking about this earlier because we've listened to your podcast. I'll go first because I know you've got some really good thoughts. But I probably want to know how many calls and meetings we're setting on the front end of the sales pipeline and our customer move outs, because I think I could probably I can probably get the middle part figured out.
For me, I mean, I think it depends on, if I was in more asset management, my answer would be different. But, more about me doing in the brokerage role, I'd say first being kind of just our pipeline or leasing activity report, just seeing where deals are at, and what kind of stage we're at. The next would kind of be our park reports. We have monthly park reports. We kind of view, based on each, office park or industrial park, how many showings have there been, how many proposals we sent out, how many leases have we completed. So it kind of just shows, full on activity of that whole year. And then the last would kind of be our market survey. Just lets us know where our parks are at in occupancy, and then what we track, of our competitors, and just see how we, match up against that and any other kind of big, transactions that have happened throughout that year.
Guys, as we get towards the end of wrapping up here, I've asked lots of questions. What's one question I did not ask that I should have asked?
Well, I think one of the things that's unique about R&R, and I'll throw this to Nathan, is just we have a unique joint venture concept. And I think, it's something that we haven't talked about publicly a lot, but I think it's a unique opportunity out there. And I would just say, Nathan, I think that's something you should just mention.
Yeah.
I think that's something that can resonate with the audience.
So about, I'd say 2/3 of my days I'm leasing, just trying to fill vacancy at R&R. Then the other third, I'm, calling on these institutional investors. So this is kind of just a strategy that, Dan Rupprecht kind of instilled, working at, Principal Financial Group in the real estate division. And we like to do these 50-50 pari passu joint ventures. And, we'll, like Adam said before, we're kind of, full service real estate developer. We'll buy land, ground up, develop it, lease it up. And then once it gets stabilized, we like to bring in either, I'd say these institutional investors are typically the ones I'm calling are life insurance companies. They could be family offices, private equity firms, but just trying to find a way, people invest in, stocks, they invest in, bonds, just to get some kind of exposure as more of a passive investor in real estate. And this is kind of a vehicle to do that. So
to bring them in on the JV side as you've got projects put together.
Yeah.
10 million square feet. It doesn't build itself, right?
It takes 40 years to build.
It takes 40 years, and it takes certainly the investors are a key part of that, right? There's a lot of it's a team sport. It's a puzzle to put the whole thing together.
Yeah, we've been seeing a lot of activity on the industrial and multifamily side for that private capital.
Sure, that makes total sense, and it's still moving. Even though when people talk about interest rates are high, whatever happens going on, this is an active market. I mean, money's moving all the time, always seeking a yield.
Yep.
Right.
Correct.
Especially this market, I think this is an attractive investment market. Yeah, very stable return. So if people are looking to get out of some of that turbulence, this is a great place to come to.
Yeah, I love this conversation. I appreciate being here. Say for the audience sake, if somebody wants to connect with you, where can they go? What should they do?
Ethan and I are both pretty active on LinkedIn, but our website's rrrealty.com, and look me up on LinkedIn. If you're going to a networking event, there's probably a good chance I'll be there. But never hesitate. Reach out on LinkedIn or my email and phone number all on our website. You can check it out and shoot me a note. Enjoy connecting with new people. I think I had a lot of people that were willing to connect with me when I got started, and always like to return that favor, pay it forward.
Yeah, likewise for me, LinkedIn, Nathan Rupprecht, and then you can read more information on our website as well.
Perfect. Links are below in the show notes, everybody. Nathan, Adam, I appreciate you guys being here. Thank you.
Thank you, Neil.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing.